Hello, everyone, and welcome to Grow Your Wealth, a series brought to you by BQ Prime and powered by Grow, an investment platform that's fast, easy, and transparent. As financial markets capture the imagination of more and more Indians who seek to look beyond fixed deposits and mutual funds and want to directly invest and grow their wealth, this series seeks to demystify fundamental and technical analysis, and that will help investors take much more informed investment decisions. They help investors to take calls on whether to buy, hold, or sell an asset in the stock market. Now, today, the topic that we'll be looking at is two of them: technical as well as fundamental analysis. What's the difference between them, and when do you use either of the two? To explain this topic to us, we have Dr. C.K. Narayan. He's a veteran of India's financial markets and respected as one of the finest exponents of technical analysis in India. He brings with him nearly 4 decades of experience and insights on Indian markets. He's been a part of large broking houses and has catered to individuals at the retail as well as headed large institutional desks servicing FIIs. He is also the founder of Neo Trade, which is an AI-based trading and analysis software. Dr. C.K Narayan, welcome to the show. Thank you so much for joining in.
Thank you for having me on the show.
Let's start off first by understanding technical analysis, the very basics, and how it differs from fundamental analysis. Dr. Narayan, with all of the experience that you have had, what is the key difference between technical and fundamental analysis when an investor kickstarts their trading or even investment journey?
Well, both the forms of analysis, fundamental and technical, with finding out future direction of stock price movements, right? Because that is where opportunity lies and that is where profits lie. So therefore, the focus lies upon finding future direction of stock price movements. Now, stocks move and they keep moving all through the day whenever they are trading. Now, movement is always caused by something, right? There has to be a cause for movement. So you could say in a sense that movement of a stock is actually an effect of an underlying cause. And that cause may lie in any area. The cause is largely fundamental in nature, meaning that there is something related to that specific stock that is creating that movement. And this movement occurs because people are buying it or selling it, or there are transactions which happen in the market. So these transactions then take place at different prices, and that is how movement happens. So we have two areas in the markets of analysis. Fundamental analysis largely studies the causes behind the movement in stocks. Technical analysis, on the other hand, studies the effect, right? That is the movement of the stocks themselves by structuring the movement in a certain way. So fundamental structure various elements in the way to study what can cause the prices to move. Technical analysis looks at and structures the price movement so as to know how prices are moving and where they could move to. So therefore, one is part of the cause, that is fundamentals. The other is part of the effect, which is technicals.
All right. Now that we know the key difference between fundamental and technical analysis, Dr. Narayan, in your opinion, what is the tool or the method that new investors should start off with?
In my opinion, new investors must most definitely start with technical analysis. And I'll give you some simple reasons to that. Number one is that when you're dealing with fundamental analysis, the variables that you want to deal with are almost infinite in number, right? And it requires a certain amount of expertise. It requires a certain amount of, let's say, qualification by way of education, etc. A certain ability to access the data, understand it, interpret it, put it together, and make forecasts. It's a really big task for a newbie. Whereas if you take something like technical analysis, it is confined to just two variables, just two. The first one is the price of the day, and the second one, which goes with the price, that is the volume. So the entire variable set within technical analysis is just two. And therefore, it's a very finite form of analysis where you don't have to go looking at interrelationship between many variables. So you just study the two. So therefore, you can say study of fundamentals will be to you to for lack of any other word, study would be kind of infinite, whereas study of technical analysis can be quite finite, and therefore TA can be learned quickly, easily. TA is a more direct way of approaching the markets. So I think it'll be much easier for new investors to start their careers with technical analysis and then go on to fundamental analysis as they mature in the market.
So newbie investors should start off with technical analysis. However, Dr. Narayan, this method of analyzing the stock market, picking stocks, etc., there are a lot of jargons in it, and we will be discussing them, of course, in all of our further episodes. But do you think that this could be intimidating or appear intimidating to a new investor? Do you think it could be a hurdle for them to be able to use technical analysis to its full potential?
Well, you see, when you set out to learn something or use something, there's always a first time. It's a new thing, right? So anything new appears a little bit daunting for anybody, for whatever new thing you attempt. So when you come to the market and you start out with technical analysis, then when you go into the depths of it, you will understand that technical analysis is actually like the language of the market. It is the language by which the market itself speaks to you. So just as in learning any new language, let's say you just, tomorrow morning decided to learn to speak in Spanish. You'll have to pick up a whole lot of new words in Spanish and learn to say it in phrase and combine them and do it. It is a little difficult until you know how. So it's exactly the same thing with technical analysis. It is the language of the market. So there is lots of words to be learned. They may be jargonish, as you put it, or they may look intimidating, but they are not really. Like no language is really intimidatory in nature at all. Neither will technical analysis be. It's just something that you learn. And once you start doing it, you'll find that it's pretty easy to go along.
All right. Well, you enter the world of the markets, you should learn to speak the language of the markets as well. And technical analysis is one of the best languages to learn out there. So, Dr. Narayan, then, what are the best resources that investors can study or learn technical analysis from?
Well, just like you would, learn any other element through some training program, right? It's very difficult to learn things on your own because, of course, there are tomes and tomes and tomes on every subject. Google itself is a very vast learning area if you want to do it. YouTube is a huge learning area if you want to go down that road. But the problem with Google and the problem with YouTube, for example, is that even though it contains all the material that you need, or almost, they are not there in a structured format. So when you set out to learn something, you need to learn it in a very structured way, right? That is when actual learning takes place in a very serialized kind of way. That is why we have schools and colleges, and the curriculum may repeat the same subjects, but they repeat with greater and greater depth and intensity. So you have to learn a subject that way. So therefore, the best way to do it is to join some training program. Fortunately, there are many people doing training programs in any city within India or outside of India also. So joining a technical analysis training program is not so much of a difficulty, but you should join a training program and learn it well. Otherwise, if you try to learn it from YouTube, you will learn it in a very haphazard way, and that will not really make for good learning. After doing some training program, you should read some books. There are, like I said, at least about 50,000 books available on this subject of technical analysis. So you can start with good comprehensive books on technical analysis, go on to topic-wise or specific tools within technical analysis. The learning can be, almost lifelong. I am 45 years in the market, and I've been doing technicals for 40 years, but I still read books, I still look at videos, I still listen to other people. There's always something to be learned. So keep up the learning, but join a training program first and then read some books.
Well, with the 40 years of experience, Dr. Narayan has not shut his books, and in markets, the learning never stops. If this series has got you interested and piqued in the financial markets, stay tuned because we at Grow Your Wealth have many more such episodes lined up for you. Dr. Narayan, thank you so much for joining us. With that, we will wrap it up on this episode of Grow Your Wealth.
Thank you.